most people talk to a financial advisor who doesn't do anything with taxes. And so then they say, here, go talk to your tax advisor. And the tax advisor says, go talk to your financial advisor. And nobody's talking about, how to put it all together. Welcome to Wealth Creator Radio, where we help people overcome the uncertainty of having enough retirement income. I'm your host, Eric Heckman, a certified financial planner with over 30 years of experience. We want you to enjoy life and not have to wonder where your money will come from and how long it'll last. My mission is to show you how to develop a personalized income plan so you can retire more and have worry less wealth. Here at Wealth Creator Radio, we cut through the noise and get straight to what matters. We understand that the world of retirement planning can be filled with confusing products, ever-changing tax laws, and volatile markets. That's why we're here to help successful people like you navigate the uncertainty and create a blueprint for a thriving, work-optional life.
Today, we're talking about a mistake that so many Americans make when it comes to their IRAs. Rolling over an employee-sponsored 401k into an IRA is a great choice for so many of us. But listen to this. According to Vanguard, there's one simple mistake that more than 1 in 4 investors make doing this process. And that mistake costs investors a total of more than $170 billion each year in lost retirement wealth. So today, Eric Heckman of Heckman Financial is going to tell us about this mistake, why it happens to so many people, and what you can do to help avoid it. Here's our phone number as we get started, 800-454-1184. You can call or text the word visit to that number for a complimentary appointment, 800-454-1184. Another thing you can do is text the word toolbox, because you can get the toolbox, what we call it. It's full of information, lots of resources about retirement that you can get, plus Eric's book, Blueprint to Worryless Wealth, all educational. Text the word toolbox, 800-454-1184. And remember, our podcast comes out every Tuesday morning. In case you missed part of this show, you can always catch it on Tuesdays. Just get it wherever you look for podcasts, okay? Or on YouTube. Just look for Wealth Creator Radio. Eric, hello to you.
Hey, Luann. Yeah, we're getting close to the election stuff hopefully being over.
Yes, I can't wait.
Hopefully it doesn't extend past that. But
yeah, who knows?
Yeah, you can go back to watching TV and safely without all the obnoxious ads.
I know it.
So, yeah, but, one of the things you do want to be looking at is, what's happening with your old money and where's it going, and pay attention to it, right?
Yeah. Okay. So speaking of paying attention, what can you tell us about this major mistake that Vanguard says so many investors are making?
Yeah. Well, the funny thing about this is, this article is really just talking more about the fact that a lot of people do the rollover, not that they forget the old retirement plan, they did it, but then they forgot to do anything about it. So I'd say, 80 to 90% of rollovers from a 401k to an IRA are typically done old school by doing a check. So, if you're going from one institution to another one, they make the check payable to the new institution, but they want to make sure you saw it and it was you who got it. So they send the check to you, payable to their company, so it qualifies as a rollover. So it's not taxable or anything, but then you have to send it off to the new company. Well, then you have to do one other thing, invest it.
Right.
So, and that's the part where a lot of people, I guess, have been messing up. Personally, I ran into a couple that, they'd done pretty good saving, but they had almost $400,000 in an IRA. And this was, this was fairly recently. So this was, they did this rollover, I think, in 2010. And that's when, of course, after the 08, 09, meltdown, they were still nervous about how the market was. So they didn't invest it for 13 years. And it was at 0.01.
Oh, no.
So the amount of money that they lost was astronomical, especially since in hindsight now, which of course they couldn't have, cheated, looked ahead like that. But that was the perfect time to get back in the market because it shot back up, and such from there. So yeah, it was just because I was just wondering, why is all this cash in there? And like, oh, well, we just still haven't invested it. It's from when? And like 20, and like, really? So, so that's pretty bad. And I also had another client one time that on the flip side, she forgot about her 401k. And then all of a sudden somehow got a letter or somehow got something. And it was a company she had been at almost a decade ago. And it was 80 grand in there when she realized it once was 40. So it had done well because she accidentally left it invested. So
Yeah.
bad part is she'd forgotten she had 80,000
Wow.
or 40 at the time.
Right.
So at least hers was invested. But yeah, no, lots of times people roll that over and then just forget to put the money, anywhere.
Yeah. Okay. So you mentioned, some people just make that decision to stay in cash, whether they mean to or not. So
Yeah,
why is
I mean, yeah, lots of times it's well, sometimes it is like I was saying that one client they were freaked out of the markets and stuff. So okay, but yeah, you got to put like a timeline on that, right? You got to say okay, and revisit this in 3 months, 6 months, or something, or at least if you're gonna leave it something guaranteed, go find something that's guaranteed that's paying higher interest. But don't just leave it, and especially the default money market type stuff or the default accounts, because those ones are by definition always the lowest, the ones that the brokerage companies will give you. So yeah, you really want to make sure you have that money invested, and education's so critical, and that's why we've built this digital toolbox, like you mentioned, where we've got things like, will my money last as long as I do? Am I paying too much taxes in retirement? Social Security decision. Also, my book, Worry Less Wealth, and a link to set a time, talk with me, 15, 30 minutes. All you have to do is text the word toolbox to 800-454-1184. Again, text word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
And you are listening to Wealth Creator Radio with Eric Heckman. I'm Lou Ann Fulmer. We're talking about something that Vanguard is telling us, an error that investors are making. Just how costly again, Eric, is this?
Well, yeah, Vanguard says that it's about $170 billion a year of lost retirement wealth to potential investors, right, that they had. Yeah. So let's say you rolled over the money at 55 and then didn't pay attention and go to retire at 65. They're estimated to be about 130,000 of lost wealth, which is pretty brutal.
Yeah, it is brutal. So again, do you think this is a mistake that people make just because they don't understand investing?
Some might be, but a lot of it, at least again towards this Vanguard research, was just they just didn't pay attention, and they thought the money market would be nice and safe, and they thought it was like a mutual fund, but it's not, right? It's more just like a savings account, and especially if you're not looking for the highest paying one, it's probably usually the worst interest. So that's the hard part, is that most of these people were not thinking or not realizing, and maybe lack of education could be a big part of it, of what to do with that money. Or sometimes they just kind of forget too. I mean, sometimes people just do the paperwork and do all the stuff, and then they get busy at their new job.
Right. Yeah.
Why'd you roll over your 401k? You got a new job, right? and just don't go back and look, and oops. Right.
Right. So obviously people just need to seek help, right? When they're doing this, don't go it alone, right? You're leaving another job, then, get a financial advisor. That's what we keep saying. You need to have some guidance with this. And that's what you and your firm focus on, right?
Yeah. I mean, lots of times it's really good to seek help when you're doing these types of, transfers and changes. Did you have some Roth money in there? There's actually a special tax consideration if you had company stock. So that's one of the things that you want to watch out for. But yeah, basically about 70% of Americans are missing any sort of written financial plan. And it really shouldn't say financial plan. It should be a written income plan.
Okay.
And so that makes people feel less confident about their future. They worry a lot more without that having that written plan. And, and some of those people, they could be leaving money on the table because they're not looking at Roth conversions or funding this account or doing this differently. And, that's why we set up that blueprint to worry less wealth, so we can look at this, make sure you're taking advantage of all sorts of tax benefits that you can, and make sure that money's going where it should be going. So, if you're listening right now, one of the things we can do is we can help you figure out how much money you're going to be spending in retirement. Look at any of those things that, maybe you're missing. Obviously, we want to account for inflation, stock market volatility, tax increases, healthcare costs. We want to make sure that money keeps going throughout 20, 30 years of your retirement, and really, hopefully, have you live like you do today, right? And so again, that's why we set up the blueprint to worry less wealth. And if that's something you want to take advantage of, all you got to do is text the word visit to 800-454-1184. Again, text word visit 800-454-1184 or book directly online at wealthcreatorradio.com.
Worried about retirement? You're not alone. Running out of money is the number one fear for retirees, but you don't have to face it alone. Join Eric Heckman of Heckman Financial for an exclusive movie event that could change your future. On Tuesday, October 29th at 6:30 p.m., we're hosting a private screening of The Psychology of Retirement at the Cinelux in Campbell. This insightful film, featuring renowned experts like Morgan Housel, will show you how to conquer your retirement fears and take control of your future. Tickets are free, but seats are limited though, so reserve yours now at wealthcreatorradio.com and discover what you can do today to ensure a secure tomorrow. Eric Heckman and Heckman Financial, your partners in crafting a worry-free retirement. Visit wealthcreatorradio.com to sign up today. That's wealthcreatorradio.com. Investment advisory services offered through Heckman Financial and Insurance Services, Inc., a registered investment advisor.
Hey, thank you so much for joining us today. I'm Lou Ann Fulmer here with Eric Heckman. And as you enter or approach retirement, it's natural to start thinking about how you're going to turn all your dreams into a reality, right? Whether that means traveling, spending more time with family, maybe just enjoying a simple but confident life. Your income is going to be key to making that all happen. But in an environment of falling interest rates, maintaining that income can be a lot more challenging. So that's what I want to talk about right now, Eric. What are some of the things people need to be considering right now to adapt to this new environment of lower interest rates?
Yeah, well, that's definitely the switch, right? We had the fast rise of interest rates, and now we're back to where we were before.
Yeah.
And that's one thing that also takes a while for people to even start paying attention to, I think. And so sometimes they might be going, hey, I'm getting 5% in my savings account. Well, hold it. No, now it's not that. And sadly, a lot of people were not paying attention on when the rates went up either, and didn't pay attention that they should have moved their money from that 0.01 to the higher yielding ones. So first and foremost, I think you just need to pay attention, right? Be looking at those interest rates. Anytime things are falling in terms of rates, you want to lock in stuff longer. So lots of times, with banks, you want to lock that in for a longer period of time, 3 to 5 years. But if you need it, lots of times banks won't let you get to it. Insurance companies, actually, if you do like the 3 to 5 year fixed annuity type of accounts, those ones typically you have to check with the company, but lots of times those would allow you to get least interest only. Sometimes they allow you to get 10% out. So, that'd be one thing to be looking at is just, how can you, lock in those rates for a little bit longer? Because then it's kind of like as everything else is dropping, if you can stay up high, a lot nicer, right?
Yeah.
And until they renew.
Mm-hmm.
And then, also be looking at other things. There's some guaranteed products that also index with the market. And I find those ones over time, statistically speaking, should out earn a lot of those fixed rates anyways. So again, no more risk, no extra, there's no fees or costs or anything. So, there are options out there. If you put it all in bonds and the bonds keep going down, interest rates keep going down, well, it does help bond prices, but depends on how long term those bonds are and such. So that gets a lot more complicated. So that's one of the things is just, first of all, paying attention. And then secondly, having a plan to react to all this.
Yeah, of course. And so it's tempting to kind of look at longer term bonds for better rates. But, like you said, locking your money in for those for 20, 30 years can feel like a huge commitment. There's so much uncertainty about the future and all that. But what are your thoughts on how to approach that, longer term bonds?
Yeah, well, kind of think of if you're holding a straw, and if you hold it in the middle and you go up and down, kind of like a teeter-totter seesaw, it goes up and down the same amount on each side.
Uh-huh.
But if you hold it at one end and go up and down, that other end is going to go way up and down, right? And so if you're talking 20, 30-year bonds, the slightest change in interest rates make those values go either up or down a bunch. So yeah, you may win on the price going up if rates go down, but what if they all of a sudden flip the other way? Now you may be stuck with a bond that's not yielding as much, maybe having a loss on it unless you hold it those 20 or 30 years, which most people don't necessarily want to hold it that long time. So yeah, so that's where, laddering it out, spreading things out, having a lot more diversification is a lot better way to do it. And sometimes even just some income portfolios. We have some income portfolios that pay really great rates and dividends. And so there's lots of options, but again, it's, you don't know what you don't know, right?
Right.
And so that's where asking somebody and finding out and getting a lot more information will really help you figure out what should you be doing.
Eric, explain what you mean by laddering. I mean, you kind of did, as far as the teeter-totter goes, but what are some advantages it could provide?
Yeah, so laddering, or I think bucketing is kind of almost sometimes a easier way to think about it. But laddering is
Okay.
kind of like having different steps that when they renew. So maybe you put some money in a 1 year and some in a 2 year, 3 years, and so then every year you've got some coming due. So some of the ones that have the longer term ones should earn more money, and the ones that obviously have the shorter term won't earn as much, but it does give you liquidity. And sometimes people overpay for liquidity. I find lots of times people think they need a lot more access to a lot of their money than they really ever do. I mean, most things are covered by insurance, right? Most big ticket items like a big storm hits your house or, car accident or, health stuff, all that's usually covered by insurance. So how much liquidity do you really need? Sometimes people have way too much, and liquidity costs you money because you can't earn higher rates, right? And so, so if you can spread those out, or even just see, like we said before, there's a lot of other options out there too to do that. So maybe you do some ladders, and some different CDs or something, but also have some other monies that are more medium term and long term that are just going to earn more interest and more earnings. So, again, this all comes down to that awful word, plan, right? Nobody likes to do it. It's boring. But yeah, once you have a financial plan and you have a model that you're saying, okay, this is why we're doing this is what happens when these things change, then at least you why you're doing it, right? Versus just somebody said so, or saw some article, or some friend of mine told me this. That's not a plan. That's a reaction. So we want to switch from reactions to plans. And so one of the things that I love to do is really get people to get some information and get some real data. And so we've got some great downloads. They're like 10 to 15 page quick reads that you can do about will your money last as long as you do? What's the best time to turn on your Social Security? Am I paying too much taxes in retirement? And even a copy of my book, Worry Less Wealth, and even a link to set up a time to talk with me, Eric Heckman. So if you want to get access to all that, all you have to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
And you are listening to Wealth Creator Radio and Eric Heckman of Heckman Financial. I'm Lou Ann Fulmer. So if we are indeed entering an era of lower interest rates, of course, not knowing how long it's going to last, relying solely on those traditional interest-bearing accounts, accounts could not be enough to generate that income that we need in retirement. So why don't you get into the alternatives? You touched on them a little, maybe other strategies that people could consider, Eric.
Yeah, well, I've always been a big fan of what I call steady income. And these are high dividend, low volatility type of assets, stuff that pays good earnings, like, typically anywhere between 5 and 8%, either monthly or quarterly. Even if you don't need the money today, just having that build up in your portfolio gives you a stash of cash to go jump in when the market's down and buy low like you're supposed to. And, so that's one option. Like I said, there's some guarantee. There's some of the insurance products where they have the guaranteed indexed accounts where principal can't go down, but you earn a rate based every year off of the S&P 500. Those can be really wonderful because on the big years, they're going to earn some pretty good money. And on the down years, they're not going to lose anything. So, there are other ways to have money still safer, but without, locking in a lower rate.
Yeah. Now, navigating these uncertainties of these interest rates, and then, of course, you're trying to maintain that income in retirement. That's all overwhelming. So obviously, we always say on our show, you don't want to go it alone. So talk about how, you are offering this to our listeners, a chance for them to come in and you'll help address these challenges with them and look at what they're doing and come along beside them. What's your offer, Eric?
Yeah, well, what we do here is we do the blueprint to worry less wealth because we want you to worry less about your money and retire more and have fun.
Yeah.
And first and foremost, you have to have a customized income plan. There's no way you can do retirement successfully without that. That's like walking in the forest with no GPS, no map, and hoping you're going to get someplace that you're meant to go versus someplace you end up going. We want to have it purposeful and driven and on a mission there, right? So we want to make sure that that's all planned for your taxes, your inflation, everything. Then that goes into how you should be investing, what the tax ramifications will be, healthcare, legacy issues. And those are the 5 points of the blueprint to worry less wealth. Something we can talk to you about and have a free consultation. Just find out what your worries, what your concerns are, and then see if it makes sense to go forward from there. So if you want to take advantage of that, all you have to do is text the word visit to 800-454-1184. Again, text word visit 800-454-1184 or book directly online at wealthcreatorradio.com.
Thinking about healthcare costs, long-term care expenses, and income needs in retirement? How will you afford it all? And what can you do now to help ensure your loved ones will be okay when you're gone? Eric Heckman at Heckman Financial has access to tools and strategies that can help you pursue your retirement dreams without taking on too much risk with your money. Interest rates are the highest they've been in decades, so take advantage of this seemingly once-in-a-lifetime opportunity to help protect your retirement before it's gone. Learn about the tools and features available today that could provide bonuses, potentially adding up to tens of thousands of dollars in additional income when medical needs arise. Schedule your visit with Eric Heckman at Heckman Financial today by calling 800-454-1184. That's 800-454-1184. These opportunities won't last forever, so call now to help protect your future. 800-454-1184.
As we enter a potential era of lower interest rates now, a lot of people are wondering how this might affect their overall investment strategy, particularly when it comes to the stock market, Eric. So I want to talk about that right now, how these lower interest rates might impact the market, and then what should investors be thinking about when it comes to their equities?
Yeah, well, typically falling rates do help the stock market, because of you and I can get mortgage rates, right, and other things cheaper. Businesses can borrow cheaper, right? So there's a lot of benefits there. The only problem is there's been a few times where they had to lower them because things were so messed up. And so of the 14 times that they've lowered them, and 12 times the rate, the market's gone up, but 2 of the times, the .com crash and the mortgage meltdown in 07 and 08, those were both times when they had to, the one that really changed how the reason why, those rates are going down is because things were bad, right? So that's not as great a time frame. So hopefully everything's good, right? And it's not one of those 2 bad times.
Exactly. Yeah, that's the truth. So all this uncertainty that we are having right now, what would you say is the most appropriate way for people to help protect their retirement?
Well, nothing really should be changed. I mean, it should be like you always go back to your investment plan. The problem is, do you have one? Right? So something like 80% of people don't really have any sort of plan or income plan. So, okay, well, then there's your first step, right, is get that done. And so really it's just more about, is it properly diversified? And a lot of times people think about just stock market money, or when they're talking about, they're thinking stocks, bonds, but it should be also, do you have money that's guaranteed, foundational money that can't go away? Do you have some steady income money in between? Also, what's your allocation between tax-free stuff like Roth and taxable stuff down the road like IRA and 401k? So it's more than just that normal allocation. You got to look at not only investment allocation, types of investment, but also tax classification of allocation. And so looking at all those, you really want to keep everything balanced. And as you get closer to retirement, you want to dial back down that risk and make sure that money is going to be there for the rest of your life.
Sure. So if falling interest rates continue, then, now probably is a good time to take that proactive planning approach like you're always telling us on our show. So, Eric, what are some practical measures that you want people to consider today to help ensure that their retirements are going to stay on track?
Yeah, well, again, look at the overall plan. Are you still on track? Are you, getting closer or farther to your destination, right? So we want to know that. look at any other big changes. And, some of the things that we might want to look at is there's some types of businesses and some sectors that do better when rates drop and some that don't do as good, right? So there is a little bit of a kind of sector type of stuff you can look at. And then, just really making sure the plan's in place. And that's, I know, boring, no fun, right? But that's really what you want to look at. And also, of course, you have to look at how is the rates affecting government, national debt, and all those types of issues. So, most people talk to a financial advisor who doesn't do anything with taxes. And so then they say, here, go talk to your tax advisor. And your tax advisor says, go talk to your financial advisor. And nobody's talking about, how to put it all together. And it's kind of silly if you're talking about IRA, 401k, Roth conversions, dividends, capital gains, all these things have tax ramifications and investment ramifications. And, sadly enough, most of my peers in this business, and wealth management, financial planning, they think they're kind of separate areas. And that's really wrong. So that's why I'm licensed to do taxes. That's why we want to really focus in on how the taxes play into this whole situation. So, again, here at Heckman Financial, what we do is we go through and we create that blueprint to worry less wealth, where we look at, your income plan. That's the most critical thing to have first and foremost. Make sure that money's going to last for as long as you do. Where's the money going to come from? And then that tells us how you should be investing now. And that's more critical than the current rate environments. It's really where you're going to get that income from. And then look at the tax ramifications along the way. How can we lower your lifetime taxes, not taxes 1 year? We want to lower it for the rest of your life. And then what's the healthcare issues along the way before 65, post 65? And of course, who gets your assets when you're gone? So legacy planning. So those are the 5 areas that you need to have really a good plan for. And, if that's something you want to take some action on and say, hey, yeah, it'd be nice to get some of these worries and maybe be able to worry less a little bit. Get those worries off your chest and say, okay, here, maybe I should talk to Eric for 15 or 30 minutes and see if we can help you at all. So, if you wanted to take that action in that time, all you have to do is text the word visit to 800-454-1184. Again, text the word visit, 800-454-1184, or book directly online at wealthcreatorradio.com.
And we just thank you so much for joining us today. I'm Luann Fulmer here with Eric Heckman. He's founder of Heckman Financial right here in the Silicon Valley area. And he has been helping people just like you retire with confidence. That's his goal for you. He's been helping people for over 30 years now. So we're just so excited you're joining us today. This is Wealth Creator Radio, and we're going over a lot of key information that we're glad to share with you. Eric is very knowledgeable about what he's doing. And my goodness, we've been talking about these falling interest rates. It's kind of a new environment for a lot of us. It's not what we've seen here recently, but there are some potential issues that come with that. Eric, in your experience, what do you believe is the single biggest challenge retirees are facing when it comes to managing their income in this environment now?
Well, really, it's always about, worry, right? Uncertainty, lack of confidence of, is the money going to last? All those types of things really kind of come down to an easier, less fancy word of worry, right?
Yeah.
It's kind of like that gas gauge is on and you're right at the very bottom and you're trying to figure out, can I actually make it to that next gas station? And you're starting to look at the side of the road to see where you have to coast over to.
Right.
If there, you could probably not describe anything that was around you other than those 2 things, the shoulder and the next exit, right?
Mm-hmm.
Even if you're in a pretty area or something, you're not going to notice anything because that's all you're focused on. And that's no way to live, right? So we don't want to have you going through retirement focused only on, is my money going to last or is it going to run out? And I don't want to do anything because, it might happen. No, that's not the way to live.
No,
So
it's not.
we want to have that plan. We want to have that income plan in place and know it's going to be okay. And so once you have that plan in place, then you can go, hey, okay, let's just check in once a year. But yeah, you're doing good.
Right. Yeah. Who wants to spend too little, and not really enjoy your retirement and then find out you had plenty, oh, I could have done those fun things, you don't want to have any regrets. So talk about how you do this retirement income plan, how you develop it. And obviously it is something that you're offering to our listeners today.
Yeah, no, certainly. So a personalized income plan is super critical. Now, your 20s, 30s, 40s, it's good to check in. No, are you mostly on target, right? It's going to be a pretty far target away, right? So it's going to be a little tougher to get super accurate. But once you're in your 50s, 55, 60, you really need to have that plan in place, not only to know where the money's going to come from, which tax steps should you be doing, should you be making some changes tax-wise. The single biggest factor really of people's retirement is taxes. It's not rate of return. It's not how much money they save. It's how much money you end up paying to the government. Because if you pay 5% more in tax, I don't care if you made 1% more in earnings, you lost 5% to taxes, right? So that's a lot bigger number. And so we want to make sure that's in the right place. And we want to make sure everything's in the right place to make sure you have a great, worry less wealth retirement and, be able to retire more and have more fun. So, if that's something you want to take advantage of and you want to have a 15 to 30 minute phone call with me, Eric Heckman, all you got to do is text the word visit to 800-454-1184. Again, text the word visit 800-454-1184 or book directly online at wealthcreatorradio.com.
Eric Heckman and the team at Heckman Financial understand no matter how the 2024 presidential election shakes out, it's going to have a huge impact on your retirement. It's important that you have a clear understanding of what's at stake with your finances, because as we've already seen, anything could happen. Major election surprises can potentially tip the balance on our economy. And on top of everything else, we also know our current tax rates are going to expire at the end of next year, and they'll go back up. Do you think your finances are ready for all of this? Eric's election stress test can help find out. Schedule yours today with the Heckman Financial Team by calling or texting ELECTION to 800-454-1184. That's ELECTION to 800-454-1184. See how strong your plan really is. Call or text ELECTION to 800-454-1184. Investment advisory services offered through Heckman Financial and Insurance Services, Inc., a registered investment advisor. Hi, I'm Lou Ann Fulmer here with Eric Heckman, president of Heckman Financial, where their mission is to get you to and through a worry-less wealth retirement. We want to get to your questions in this part of our show. So we're going to get some insights from Eric on your retirement concerns. And then later on, we're going to keep Eric on his toes and do a little lightning round of think fast questions for him to get to know him a little better. Here's our first question. What could be the impact on my pension if I decide to retire early?
Well, it's obviously going to be lower. I mean, it's nice that you have a pension. It's pretty rare. So it's always going to be a lower earnings depending on the factor, which means less cost of living. But, you get to retire early, right? And enjoy life. So as long as you can afford it and have it, go through your income plan, I think it makes sense. But yeah, you definitely want to do some analysis before that. And especially medical costs can be a huge one if you're way before 65. So yeah, definitely have a plan before you jump into that one.
Exactly. Don't just do it on your own. Yeah. Okay. Another question here. How might my healthcare costs affect my retirement savings?
Well, of course, healthcare gets more and more expensive as you get older. Not necessarily the premiums. I mean, Medicare is not bad pricing wise. It's usually all in maybe $400 a month each, but it doesn't cover really any dental. There's a lot of copays and depending on your plan. And then obviously it depends on how many issues you have as you get older, right? So that's one of those ones where you do want to have it budgeted in. It's something that you may not be spending much on today. So maybe it wasn't in your budget, but you definitely need to add it because it will be an effect. I mean, especially I've had a lot of clients that had 5-figure dental bills and that's a pretty big cost. Yeah. I've had some where you could have bought a decent used car for what they put in their mouth. So,
weren't you the one that said some lady said she wanted to smile?
At her funeral. Yeah. Because she had $28,000 of dental work in her mouth. So.
Oh my word. Yeah. Okay. Another question for you. How do I calculate for inflation when trying to figure out if I've saved enough?
Well, inflation is going to always be there. It's going to always be ebbing and flowing and such. So, yeah, all your numbers have to be inflating with inflation. I mean, historically, it's still typically around 3. So run the numbers at that and make sure that, if you're going to retire on $5,000 today, it's not going to be still $5,000 in 10 or 15 years. It's got to be more money. So you need to be withdrawing more as time goes on, or else yeah, you're going to be buying less and less and less. And it's going to be a worse and worse lifestyle as you get older, which is not what you want to have happen.
No, we don't. And that's why it's really important to get this figured out. Go see someone like Eric to figure out if you've saved enough, because you guys can do that calculator, and you can set up different scenarios to see if someone's money will last, right?
Yep. No, definitely. So yeah, once we go through that income plan, we take into effect everything. We take into effect your taxes on the various types of accounts, right? If it's Roth, 401k, IRA, regular money, all those kind of issues, run that out with inflation. So have all those costs increasing, and then see if does that money last, and does it last to 75 or 95? 95 is usually you're pretty okay. 75, you might want to work a little longer, right? So.
Okay, another question here that retirees have: when might be the right time to start planning for retirement?
Yeah, it's a slightly loaded question, right? I mean, hopefully even my sons in their 20s are putting money into retirement accounts. Now, do you count that as planning for retirement? I mean, that's funding for retirement, but I mean, in terms of, am I on track? Am I getting close? I would probably say at least your late 40s is when you might want to kind of have a check-in and do one of those online things that they're out there. But definitely once you hit your 50s, that's when you're in that retirement critical zone where you really need to be paying attention. And, if you're 5 to 10 years out, oh yeah, you definitely need to be having a full plan just to make sure you are on pace. And sometimes people also want to retire earlier, or try to, at least not work as hard, maybe work part-time or something like that. And so if that's the goal, then you might even need to do it a little sooner if you're trying to do that, right? So kind of depends on your situation, what you're shooting for. But yeah, I would definitely say it has to be by the time you hit 50, 55 for sure. If not, maybe even a little bit sooner than that. So, I mean, that's one of the things that we do when we sit down with people is we go through the 5 areas. We go through first and foremost the top 3, which would be creating an income plan, because without income, you can't have a retirement, right? You're just unemployed. But
right.
So you need to have money coming in the door. And then how are those investments now invested to give you income? So you have to also be starting to switch how you're investing, in your 50s and 60s to get that all lined up in time for that retirement. And then, of course, taxes are always going to be there. So how are we going to minimize that over your lifetime, not just 1 year? So lifetime lowering of your taxes is a critical thing there. Like we said already, healthcare is a big one. And then lastly, legacy. Who's going to get your stuff when you're gone? Is it the people you like, or is it courts and attorney fees? So we want to make sure it goes to the people you actually like a lot more. And so having that all planned out, and those are the 5 areas everybody has a plan for it, even if they haven't written it down. And sometimes it's dictated by the government if you don't write it down. So yeah, we want one that you actually decided you picked, right? And so yeah, that's what we do when we do that blueprint to worry less wealth. So the first time we just have a 15 to 30 minute phone call, just find out what your worries, what your concerns are. And then we'll actually take you through that blueprint. We'll actually show you where you're headed and show you, are you on track or not? And, again, there's no right or wrong answer there. It's just going to give you the information that you need to know. And then at that point, that's when you can talk to us about, do you want to work with us? Do you want to take us up on some of the suggestions we're making? So again, there's no obligation, no cost. It's a great way to find out where you're at and find out, how do I get even more on track? So, if you want to set up that time, easiest way to do that is just text the word visit to 800-454-1184. Again, text the word visit 800-454-1184, or book directly online at wealthcreatorradio.com.
And please keep in mind, all of this is complimentary. This is what Eric does, and he's trying to guide you and help you with your retirement. So take him up on that. And thank you for joining us. This is Wealth Creator Radio with Eric Heckman of Heckman Financial. I'm Luann Fulmer. All right, now we're going to get into our lightning round, okay? And this is kind of a way for us to get to know you, Eric, a little bit better, okay? So I'm going to give you about 2 minutes, and I want you to answer as many of these things as you can, just really quick, okay? And then we'll go back and maybe talk about some of them, all right?
All right.
Here we go. First question, what's on your bucket list?
Well, I still have to keep riding 50 miles in as many countries as I can. And Ireland would be a good one to do next.
Ooh, okay. What's your biggest pet peeve?
Probably people not saying what's on their mind.
Okay. Favorite comfort food?
Let's see. I guess we'll go pizza.
Favorite athlete of all time?
That's a tougher one. Yeah, I don't know. I guess Phelps, maybe.
Who?
Michael Phelps.
Phelps,
Yeah.
the swimmer. Yeah, okay. Favorite book?
I guess I can't say Worry Less Wealth. No, just
You could.
But
You could say
no.
that.
No, probably. Well, let's see. I used to read a lot of Kurt Vonnegut books when I was a kid, so like Catch-22 and stuff. So
Okay. Movie that you will watch over and over again?
well, any of the teenage John Hughes movies, those are the critical ones,
Okay.
Pretty in Pink and Breakfast Club.
Oh,
all
you're
that stuff.
kidding. Describe your morning routine.
Well, I always work out for 10 or 15 minutes first,
Wow.
then read for 10 or 15 minutes while I eat some food, and
Okay.
then do the rest. So, yep.
Okay. Holiday you look forward most to?
That's a fun one. I don't know. I guess Christmas when the kids were younger, but
Yeah.
now they're older, not quite the same.
Okay. And then earliest financial lesson?
Just learning to save up and buy stuff. So I used to do a lot of that. So
Yeah.
save up my money and go get whatever thing I wanted.
Yours was okay. So wouldn't you buy records? Wasn't that your deal when you were
Yeah,
little?
no, I used to. Well, not that little, but
No, but
teenager. But
teenager,
when I was 14, I had a checking account when I was 14, so I
Yep.
could write checks to Columbia, Music to get
Yeah.
all those albums and
Mhm.
use their deal to keep getting the 12 albums for a penny and then cancel and redo it. So, yeah.
You're always good about money, even back then, So, Eric, how can people get more information on coming to you for some guidance?
Yeah, well, the easiest thing is we've got this great toolbox with lots of great downloads so you can read a copy of my book and even a link to set up a time to talk. So all you got to do is text the word toolbox, all one word, toolbox to 800-454-1184. Again, text word toolbox 800-454-1184 or download directly at wealthcreatorradio.com.
Imagine for a moment that an intense storm is pounding your house. Will the roof leak? Will the siding peel away? Will your basement flood? If your house is properly built and maintained, you'll be fine. But what about your 401k or your investments? The stock market has had a great run the last few years, but is its current turmoil making you feel uneasy? Are you confident your portfolio is built to weather the financial storm? Now may be a great time to have your retirement plan inspected. Call Eric Heckman of Heckman Financial at 800-454-1184 now. Eric will examine your portfolio and show you if your investments are in need of some weatherproofing. Call Eric Heckman of Heckman Financial today at 800-454-1184. That's 800-454-1184. Investment advisory services offered through Heckman Financial Insurance Services, Inc., a registered investment advisor.
Hi, I'm Lou Ann Fulmer with Eric Heckman, president of Heckman Financial, where their mission is to get you to and through a worry-less wealth retirement. Now, Eric, you and I often discuss challenges and risks that exist in retirement. So it's time now I'm going to have you give us an example of someone who has experienced one of those retirement obstacles. Have you kind of explain that to us? We call it a financial fail.
Yeah. So, one of the things is thinking things will be always the same, I guess is probably the best way to put it. And, when you're working, you get that W-2 and you do your taxes at tax time, right? And you either owe money or get money back. And there's not necessarily a lot that you do typically, right? And so I had a client, Dan, he came to me right when he was turning 70 to retire. This was back before they raised the limit to now 73 for required minimum distribution, but he was going to have his required minimum distribution that same time frame. But he'd retired. He figured he'd be in a low tax bracket. He'd gotten married with his wife kind of late in life, just a few years earlier, actually. And And so they both had waited till 70 for Social Security. So they're getting like 80 grand of Social Security.
Wow.
The first year, only 14,000 of it was taxable. So great deal, right?
Yeah.
But then he would take money out of his retirement account. Well, all he had ever done his whole career, and again, he met me right as he was retiring. You're supposed to plan ahead.
Late. Yeah.
Yeah, not the day of. And, and so when he did that, everything was pre-tax. So there was nothing we could do tax planning wise. And so that next year, he took out money out of his IRA because he had to, and with the required minimum distribution, plus he needed some of it to live on. And all of a sudden, 56,000 of that 80,000 of Social Security was now taxable.
Oh, no.
Because he took money out of his IRA. So a $30,000 withdrawal from an IRA caused another $40,000 of taxable income. It's like, what? How is that possible, right?
Yeah.
So he was so surprised at tax time that guess what he had to do to pay the taxes? He had to take more out of his IRA.
No.
And so the next year, 70,000 of his 85,000 of his tax was taxed.
Oh my
of that
gosh.
Social Security. And again, we're not talking, people talk about, Roth is for leaving more money to the kids, and if I don't have kids, why do I care? And, blah, 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 stuff like that. Right.
Yeah.
No. This is how the IRA, how his 401k was affecting his Social Security taxation. You don't get told about this, right? Nobody talks about that aspect of things. And so that, again, that's something where had we thought about this ahead of time, had we met 5-6 years earlier, 10 years earlier, we would have had some time to say, let's start doing some Roth stuff. Let's do some other stuff where we have some money that's tax free or tax advantage. So we don't have to jump up into these higher brackets, cause all sorts of other taxation. Right. And so again, when you're building that blueprint to worry less wealth, you want to have that income plan for life, making sure that money lasts. You want to know how that money should be invested, but also you got to know the tax ramifications of every bucket of money you got in there. And then, of course, the healthcare issues and legacy issues. And that's the 5 areas that we focus on in the blueprint to worry less wealth, something we'd love to help you out with. So again, if you want to set up a time to talk, all you have to do is text the word visit to 800-454-1184. Again, text the word visit, 800-454-1184, or book directly online at Wealth Creator Radio. You've been listening to Wealth Creator Radio. I'm Eric Heckman, and next week we'll be back with more advice to help you create wealth in retirement. Again, that number to call us is 800-454-1184. Thanks, and talk to you soon. Thank you for tuning in to Wealth Creator Radio. I'm Eric Heckman, and it's been a pleasure guiding you towards a more confident and secure retirement. Remember, my responsibility is to always do what's right for you, our client. Together, we can cut out that fancy-sounding financial jargon that doesn't help and focus on what truly matters for your financial future. If you're ready to take control of your retirement planning and build a personalized income plan, contact us at 800-454-1184 and text the word toolbox to schedule a complimentary consultation. If you're looking for more resources and tools to build your retirement future, don't forget to check out that Wealth Creator Toolbox, your toolkit for a secure and confident retirement journey. Until next time, retire more and worry less with Wealth Creator Radio.
Information provided during Wealth Creator Radio is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. Eric Heckman offers investment advisory services through Heckman Financial and Insurance Services, Inc., a registered investment advisor. Any tax advice given as part of this presentation is not intended to be used and cannot be used by the taxpayer for the purpose of avoiding tax penalties or promoting, marketing, or recommending to another party any matter or transaction addressed herein. The views and opinions expressed in the program are not necessarily those of the radio station or its sponsors, and they should not construe as legal, tax, or investment advice. You should always consult the appropriate advisor before making any financial decision.
This radio show is a paid placement.